Hi, this is Andy in Business Development with Mortgage Heroes, and today I'm going to talk about a couple of things that are affecting the mortgage industry here in the third quarter, and to give a summary of what we think is coming up ahead. First, it should be known that the White House should not have any direct influence on the Federal Reserve. However, what we've seen over the last couple months is that there seems to be some pressure being applied from the White House onto the Fed so that they can manage and maintain the rates at a level that will promote the health of the economy. Now, there are a lot of economic variables that we look at and that, of course, economists look at to determine whether we're healthy or not. And when it comes to inflation and it comes to consumer spending, we have the tariffs going on, and there's just a lot of data to basically validate any side of the argument you want to take. Now, what we're seeing here is that rates have remained low, even though they've been volatile, but volatile doesn't mean that they went from 3.5 to 4.5 or from 4.5 all the way down to 3.5 overnight. What I really mean is that the rates are changing quickly and they're moving swiftly, but they're not moving sharply. So even though the White House is not supposed to have influence on what the Fed does, there seems to be an indication that the White House would like to see the Fed cut the Fed funds rate, which helps short-term lending become more affordable for things like credit cards, car loans, and lines of credit. That generally helps the economy keep money going, keep people spending, and keep inflation in check. Typically, inflation is kept in check by rising rates, so the price of goods and services doesn't wildly go steep and increase. But sometimes if you have indication that the economy needs a little bit of a bump that will not cause inflation, you reduce rates and the economy continues to carry the momentum it does. I personally think that that's what we're going to continue seeing, specifically because we're getting to the end of 2019 and we're ramping up into the election cycle. We're already in it, but 2020 is an election year, and no politician and no government that we've seen in the last several decades wants to be going into a pullback or into a recession during an election year. They want to keep things going, they want to keep things smooth, they want to keep things positive, and then take credit for the things that we're experiencing in that nature. The next thing I wanted to talk about is the tariffs on China. Now, the intention of that is to make the Chinese companies pay more money to export their goods to be imported here at the United States. But unfortunately, as a consumer, what I tend to see is that when the price of doing business increases, it gets baked into the price that I pay. Whether that's for goods or services, it always seems to be the same thing. Now, I have already seen on the product side of the world some things where the price changed right away in direct alignment with the tariffs going into place. And unfortunately, I think that on the consumer side, we're going to see this trend continue. If it hasn't continued already, I think it's going to continue happening for products that maybe have not yet shifted to hit the customer with the increased price. I think that's coming up ahead. Unfortunately, what that means for us is that as home buyers and people who own homes are trying to refinance, more of our money is going to go to pay for products because of the tariffs if that price of the tariff has been baked into the good itself. And the last thing I wanted to talk about is the attack on the oil fields in Saudi Arabia. Now, it was unexpected, and as of this recording, it's unclear exactly how the United States is going to respond. However, again, historically speaking, what we see is that there's no direct impact on the mortgage and real estate industry. However, as things happen militarily, there's a ripple effect that ends up making its way into real estate and mortgage, especially as it pertains to those of us who do VA financing as our core service. So that not only means economically something and militarily something as the United States does or does not become involved, but it also changes things for our service members that we are serving every single day. Being in this business post 9/11, we've met with and talked to a lot of people who have served overseas, have had spouses serve overseas, siblings serve overseas, and it just changes the tone of how we do things and how people make decisions about buying, where they're going to buy, where they're going to be stationed next, not knowing where they're going to be stationed next. And it's another layer of processing that happens. So unfortunately, we don't yet know exactly what the attack is going to mean for us as a nation and what we're going to do. But I'm bringing this up today to encourage you to keep your eyes open, and we're monitoring the situation, because if there is something that comes out and we end up engaging the Middle East because of this, then I think that's going to have a ripple effect, and it's going to negatively impact the market that we see here, even locally in San Diego. Just again, because of the past, when we've seen times of war, of direct heated conflict, it does make a change in the psyche of people who are buying homes, where they buy homes, whether they do or don't at all, and then for what reason they choose to or not to refinance. So keep your eyes on that. Until that time, until we know how this is going to be approached, those of you who are still sitting on the sidelines and you are waiting to make the right decision, you really need to have your circumstances looked at face-to-face, or I'd say one-to-one, so that we can kind of isolate your set of variables and then identify what is the right choice for you for your overall financial well-being. It's easy to make decisions based off of tricky marketing and great rates and whatever, but the real truth of building wealth in real estate and actually having your mortgage debt in check is making a balanced decision that helps achieve outcomes that you decide, that we help you navigate the road and the path to get there. So if you're watching this and you're thinking, man, I have questions I have not asked yet, or I'm looking for answers I've not been able to find on my own, that's when you raise your hand and you need to just send us a note. You can call us or email us. Let us know what it is that we can do to help just talk through and think through your scenario and help you make the right choice for you and for your family. Thank you for watching and checking in for the Q3 market update. This is Andy Cruz with Business Development at Mortgage Heroes. We look forward to talking to you again soon.